Right.
So, so what we're going to do is we're going to go over these rules, right? So the very first rule is that you cut your losses intelligently, right? You do that
Yes.
by using candlesticks to identify the chart direction. And
Right.
what I mean by that is that when you see a chart that you have identified, we're going to go through the rules, but once you see a chart that fits your criteria, but one day for some odd reason it pulls back, you know, I identify what was the reason for it pulling back, and did it pull back to your risk level? If it
Right.
pulled back to a risk level that you're uncomfortable with, then you get out.
Right.
And uncomfortable with should be about 2%, no more than 5% of a loss, right? Once it starts going down that much, that's when you really start
So
experiencing
so you
significant loss.
pull back when you're uncomfortable. What about when do you feel comfortable to
All right, so
pull back?
this is where you're going to just listen for the rules, so that you can get an understanding, because I'm going to answer all these questions.
Okay.
Right. So I'm going to answer that. So when you pulling back, that pullback, it will go according to whether the stock is near the 5 EMA price, which is what we're going to get into, or it's near a support level, which is what we're going to get into as we continue going down the rules. Um, the next rule is, what are the overall market conditions? The market conditions every day, you should look and see whether the NASDAQ, Dow, and the S&P, what are they doing? Particularly the NASDAQ and the Dow. The NASDAQ measures a lot of the tech companies. So when you hear about companies like Peloton, like Apple, they are tech companies.
Right.
So the tech companies are going, even though Apple is in the Dow, which measures the 30 best major companies in America, the NASDAQ measures the tech companies. So you will see a lot of Kathy Woods being mentioned when it comes to tech. That's because tech is all measured by the NASDAQ. So you can say Kathy Wood and the NASDAQ might start mirroring each other soon, if they haven't already. The sector is what your company is in, whether it's in technology sector, whether it's in healthcare sector, whether it's in financials, whether it's in communications. There are different sectors that have smaller industries, and those smaller industries are based upon whatever that company does. So you might have a communications company that's in the internet space, that is the internet space of like retail or something like of that nature, right? So that's something, when it comes to that's something that you want to kind of look at every day. Well, when you wake up, whether it's sometime around 6 in the morning, or sometime around 9:30 in the morning, sometime around 11, sometime around 2:30, and sometime around 4, those are probably like really energizing times in the market, whether it's on the upside or on the downside. So, those are times that you're awake. Any questions about this rule?
Okay, let me ask you one question. If the stock is trading early in the morning, why are we looking at it at 11 and 2:30 and 4 p.m.?
Because money moves throughout the day. It doesn't stop.
It doesn't stop.
Think of it.
Do you make a trade during those times of the day too?
You make trades based on the rest of the rules that we're going to go
on. Okay, all right.
We're going to do that because nothing is, I wouldn't say black or white. It's more on, and I'm more of a black and white person. I need to see this before I see this before. And sometimes it doesn't run that way. Sometimes you'll have about a 70 or 80% chance where these things move in your favor, and you have to go with that 70 or 80.
Yeah.
Because once it's 70 or 80 in your favor, that means that the market, what you're thinking is on your side, and now you just want the market to help with that thinking. That would take over the rest of the 20. But
okay, let me ask you a question. Okay, you're looking at NASDAQ early in the morning. What are we looking for in NASDAQ?
So
And Dow.
what you're looking for on all of the market conditions is
Mm.
whether it's positive or negative, whether that when you look and they say and you hear financial news information being shared,
Mhm.
and the
Mhm.
news and the information being shared sounds negative, then
Mhm.
you look at the numbers of the Nasdaq and the Dow, and you
Yeah.
see what does it reflect what's being said.
Okay.
That's what you want to see. You always want to see if the market and what's being said are 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 continuous or on the same line with each other.
Right. Okay. It just seemed like a lot of information I'm looking at in the mornings.
It
I'm
will
looking at.
be. It will be. It will be overwhelming. It will be
Yes.
overwhelming. So yes.
And I can't decipher what I'm looking for and what I'm looking at. And it's just so much information. And I'm like, where am I? I feel lost in it. You understand what I'm saying?
Right. This is why these rules will get you clarity. So
Okay.
you won't have all these racing thoughts going through your head. And you can come to it like a robot, literally. You'll come to
Yeah.
it like a robot.
Okay.
Um, Rule number 3 is to identify the catalyst is a stock in play for the day. The catalyst can be whatever the market is saying on that day. So if the market, like we said in rule number 2, if the market is saying something that's positive, then we're looking to see if any positive news is being said about your stock that you are in or that you're thinking about getting in, right?
Right.
So this is something that helps, right, with that other 20% that we're mentioning. When you say you do the 80%, but the market helps with the other 20%.
Yeah.
Rule number 4, where's the stock price in relation to the year, the 4-hour, 1-hour, 2-minute time charts, right?
Mm-hmm.
And describe the candlestick for each. And this is where the layers start to happen. And we'll get deeper in these layers as we go further into these rules. Where rule number 5 talks about where is the stock price, right? The
Mm-hmm.
candlestick for the previously mentioned time frames, right? This is what I'm
Right.
referring to. So the
Right.
previously mentioned time frames, the 4-hour, 1-hour,
No.
for the year,
2 minutes.
the 4-hour, 1-hour, 2-minute. That stock price, where is it in relation to those time frames? And where is it in relation to the 5 EMA, the 20 SMA, the 200 SMA prices, right? These moving averages, they're more than just averages, but they're prices on that time, right?
Mm-hmm.
And that's why it is very important that you really take this into consideration. So when we're talking about the 5 EMA, the 20 SMA, and the 200 SMA price, right? We want to know, is the stock above the 200 SMA price?
Mm-hmm.
Did the 5 EMA cross above or below the 20 SMA on any time frame? And I'll show this with 2 stocks that I cut losses on, which were
Mm-hmm.
small losses this morning, but could have been disastrous if I held on to them.
Right.
Okay, so that goes back to rule number 1: cut losses intelligently.
But how do you know that it could have been disastrous had you held on to it when you
Because
cut your losses?
when you look back at it at the end of the day,
Okay.
you analyze it. Like you look at what you don't, when you enter money into the market, it is a time for you to start writing a book, essentially. This is your time where when you say, oh, when I entered this stock, it was at this price, that price, the market was saying this, I was feeling this. Now, I am expecting the price to either go to my max loss limit, which is this
Mm-hmm.
price,
Mm-hmm.
or I want to see it to go to my max reward, which is this price, right?
Right.
And
Mm-hmm.
oftentimes you want that max reward to actually go higher than that. That's happened to me before, right? Where
Right.
it went higher. And it also happened to me where I sold my stock at that price, but the stock ended up going higher too, right?
Right.
But the
Right.
object is to always collect your profits. That's the thing. You don't want to correct losses, you want to collect profits. So
Yes.
measuring when that target sell price on the
Mm-hmm.
upside or on downside is
Mm-hmm.
important. right? And
Right.
we're going to get into that by rule number 6, draw a support and resistance line. So even though that we will have these moving averages, right? And these moving averages are going to tell us, where the stock price direction might go to. We still want to know where these prices are in relation to support and resistance. Because support and resistance, at the end of the day, rule number 5 doesn't mean anything without price action. And
Mm-hmm.
price action gives you an idea of where support and resistance are.
Mm-hmm.
Because without price action, we want to know where support and resistance are. These moving averages, they're there because of price action, and price action lets us know where support and resistance are have been created. Rule number 7, we will be creating an entry and exit plan based off of what we said in rule 1 through 6.
Right.
Rule number 8, do not buy in the pre-market, right? That's my rule. A lot of
Okay.
people don't, a lot of people like the pre-market and they want to buy in the pre-market. This goes back to what you were asking earlier. Why am I watching the stock market in the pre-market? Because stocks that have like positive news tend to move in the pre-market, whether
Mm.
it's whether it's earnings from the night before, like tonight, right? Let's say
Yes.
earnings came out for, I don't even know what company. There's a couple of companies that had earnings today. No, well, today's Thursday. Well, yesterday.
Yesterday. Yeah.
Yesterday. There was quite a
And
couple.
usually it's a Wednesday, right?
No, it's every day.
Every day there's an earning.
Every
Oh.
day there's some stock that's giving off earnings. Some days are lighter than others. Some days are heavier than others, right? Right.
Mm-hmm.
It's just based on whatever is going on that day.
Right.
So when the morning happens, pre-market, the stocks that release earnings the day before might have positive or negative movement in the pre-market, right? And that movement can dictate what happens during the trading day, right?
Right.
That's
Mm-hmm.
where, drawing your lines of support and resistance before will help, knowing or, what your entry and exit plan will help beforehand, right? When you are looking at these pre-market or even after hour movers, because there's some stocks that move in the after hours, and I will potentially buy those because I feel more comfortable in the after hours than I do with pre-market. But
Okay. What is considered after hour? After 5 o'clock?
after 4, the market
After close.
yes, so the market opens at 9:30 a.m. and closes at 4 p.m.
Yeah, okay. So anything after 4. So if you buy after 4, does it fall in the pre-market?
If you buy after 4, that falls in the after hours time. And after
Mm-hmm.
hours happens between 4 p.m. and 8 p.m. Right?
Mm-hmm.
Pre-market starts at 4 a.m. and ends at 9:30 a.m.
Okay.
Right? So the market, at least stock movement in America, is silent, right? Between 8 p.m. and 4 a.m. However, the indices still move during those silent times. So
Okay.
you'll still get, the NASDAQ, the Dow, the S&P still moving because the markets never close, right?
Mm-hmm.
The
Mm-hmm.
markets always are open, and these markets help catalyze other countries. So when America closes, right, the next market that's going to open is China and Australia. Hold on, China, Australia. After that, it would be like India, and then it
Okay.
continues going on to Europe, right? And then until it comes back on over to America, right?
America, right. Okay.
Just reminding you, even though those are the market hours, right, that I gave you from 9:30 to 4 p.m., the money never stops moving when the market closes. The market is only Only reason why the market is open is because it allows participants like yourself and myself to be in it.
Okay, so during that time, does it not move as fast, or if
Correct.
for novice or for like myself?
No, when the market during 9:30 and 4 p.m., the
Mm-hmm.
market moves, but major news happens during the pre-market and the after hour time.
Okay, okay.
Right? When the market is closed, that's when, or when market is closed, or during the
Back in.
pre-market and after hours time, that's when major news happens.
Okay.
Right? So
Between 4 and 8 p.m.
between 4 p.m. and 9:30 a.m.
and 9:30 a.m. Okay. Okay.
So I just want you to get comfortable with the time frames, because the time frame, and I'll give you a book that talks about the time frames, because that, I think increases your learning curve on
Mm-hmm.
knowing when stocks are moving.
Okay.
So that's my position on number 8. Number 9 is potential swing trades. A swing trade is a stock that you're holding for a short term, meaning less than a year. I mean, that's short-term trading. That's what I essentially do, is short-term trading.
Mm-hmm.
Sometimes day trade, but mainly short-term. So less than a year, definitely 2 weeks. 2 weeks. Anything after 2 weeks is a little bit, maybe going towards intermediate holding, right?
Mm-hmm.
But essentially a swing
So
trade,
roughly about 2 weeks.
yeah,
No more. No, you can hold it for a year, but mostly 2 weeks. No
you
more
don't
than.
have to, you can
No.
sell this stock anytime. You don't have to buy and sell in one day. You can buy today and don't sell for the next 20 years, right?
Okay, that's
So
what you mean.
yeah, but there are different types of trading, and knowing your different type of trading will help you when you're drawing out your plan, because you know
Okay.
what type of trader you are, right? So
Yeah.
in your plan, you will say, okay, I anticipate holding this for maybe the next week, maybe for 2 weeks, maybe for 2 days, especially if it hits my risk, my downside risk level, or
Okay.
maybe only for a day because it hits my price target sell level, right? Um,
Mm-hmm.
Sometimes we don't want to sell after it like goes beyond our target price level. Maybe we want to add more to our position, right? Now, but
Mm-hmm.
that will come with time when you feel comfortable with that.
Right. Right.
But with this rule, I always say, you buy after 130. Typically, I once I buy a stock, um, you know, because I said don't buy in the pre-market, but I wait until about 9:45 or
Mm-hmm.
10:30 to buy or
Mm-hmm.
sell my position, right?
Mm-hmm.
Um, if I want to open up a new position, right? Right. So I should say like potential swing trades or even new positions, uh, right? or or a new position.
But let me ask you, can you if see how you keep up with all these different other than writing it down? Do you suggest just pick a couple and just start with the two or three and then watch those two or three?
Absolutely. Like I will say, you watch as many as you want, right?
So
Because
do you write it down and watch it, or you write it in your book, or when you go there to check, you know, where you are?
so this
Is it
these are my notes
yeah.
that
Okay.
that
All
I
right.
that I wrote for today, right?
Uh-huh.
I had Snap earlier. I bought it in June, but it's now in my July notes, right? And I'll move this up. It's in my
Mm-hmm.
July notes now because
Mm-hmm.
I'm holding it in
Okay.
July, right? Now I also bought two other stocks today, right? Um, and then when I'm looking at stocks for like tomorrow, because they like popped up on my radar today, and I might want to see how they do in the morning, these are a list of some of the stocks that I have, right?
Okay. I
Right,
see.
there's quite a couple. Now, the
Yeah,
ones that
yeah.
I might be interested in, right, are these that I already started writing notes on. But right now, like as I go through my list, I'm like, which ones seem reasonable, right?
Mm-hmm.
So
Mm-hmm.
and we'll go through what considers reasonable as a trade.
Right, right.
So to answer your question, yes, write it
Yes.
down. You write
Write down,
down.
you know,
You
peak.
do this. I don't know how some people do it in their career, but I
Mhm.
know that the most successful people in their career always write down notes,
Mhm.
right? Because that helps them understand where they were a year
Mhm.
ago versus
Mhm.
where they are now. And then when
Oh,
5 years pass, you can see where they were 5 years ago versus where they are now. Because the
right.
mentality changes, the market
Mhm.
changes. It's a breathing, living thing. It's an organism, right? So
Yeah.
as that organism is breathing and moving, you want to be on the side of why it's breathing and moving the way that it is.
Right.
Um, so I particularly don't buy for something that I'm going to hold over for the next day, which is the definition of a swing trade, right?
Right.
Um, until about 1:30, maybe 2 p.m. Sometimes I'll wait a little bit longer, right? It really
Yeah.
depends on if the stock did what all these above,
Okay.
right? If it did what it hits my criteria of the rules from 1 through 7, or at least
Mhm.
1 through 6, I should say, then I can
Mhm.
create a 7 to get ready to do number 9,
Okay.
right?
Okay.
Um,
Now, creating an entry plan is when you want to get in and when you want to get out.
correct,
So it's like on the playground on the swing, and you know when to jump in and when to jump off.
correct.
Okay.
Rule number 10, I,
Mhm.
I do not buy during a red candlestick.
Okay.
Wait for the candlestick to be green first on any
Mhm.
time frame, right?
Mhm.
And the reason why I say that is because when you get comfortable with reading the candlesticks, you
Mhm.
will, because each candlestick gives you a story, right?
Right.
That's what I was
Right.
seeing up here somewhere,
Right.
right? That it tells you a story. What does each candlestick say, right?
Mhm.
So yeah, describe the candlestick. Rule number 4. So like,
Describe.
so when you're describing the red candlestick, the red means it's going down. Why am I
Mhm.
buying when it's going down? Wait, yes, you want to buy when the stock is on discount, correct? But if the stock continues to trade down lower and lower and lower, you are lessening your chances of getting higher rewards. So wait for the stock to settle at support, right?
Mhm.
Okay.
Yeah.
And then once it settles at support, then go through the analysis. Where is it? Where's the stock price? Where is it in reference in time frame and moving averages, right? So then you buy on the first green.
But that was my biggest issue. I thought that you buy when it's low and then you're watching to see or hoping that it goes up if you
Correct.
meet
You buy
those
when it's low.
criteria. But the low doesn't necessarily mean it's a red candlestick. And I'm saying, okay, red, it's going down. You understand?
Correct. So even though the candlestick is going down red, there
Uh-huh.
could still be a sell. So there still could be a liquidated sell. So let's say that you go outside, right? You recognize now that there are a lot of businesses that are not in operation, right? So they're
Mm-hmm.
closing. So they're going to have a liquidation sale. So you're
Yeah.
like, hey, liquidation sale, I'm coming in. You come in, and then you recognize that you want a pair of shoes that they have for $50. You buy the shoes for $50 because typically it's about $150.
Yeah.
Right?
Yeah.
You go back a week later, and
And it's
then
still
that
low.
store and it's lower price. You're like,
Yeah.
wait, hold on. They're still trying to get rid of the shoes. So this is
Okay.
so this is a very similar situation
So
where
you want to buy it at the lowest green candlestick then?
correct,
The lowest green candlestick.
correct,
Okay.
absolutely.
Mm-hmm.
The lowest green candlestick at support,
Yeah.
At support price. We can't, and we're going to learn how to draw these support prices. Um, we just did number 10. Rule 11.
Mhm.
Typically, if a stock price starts trading below the 200 SMA on the intraday chart, then the stock price will drop to a lower support area. Remember, we're talking about support price, right?
Right.
Support area, right? So if
Mm-hmm.
it's trading below the 200, it's going to go towards the lower support area. On
Mm-hmm.
occasion, if support has been created, the support has been created, already oversold while the price is below the 200 SMA, then the possibility of the stock price to trade up towards the 200 SMA price increases, right? So you have a double whammy there. The double whammy is one, uh, the, the, the stock price is at the support, right?
Right.
That's one,
Mm-hmm.
right? The stock, let's put down stock price for the stock price is at support, has been created. And the double whammy is two, already oversold while the price is below the 200 SMA. Then the possibility of stock price to trade up towards the SMA price increases. Now, what do I mean by that? When the stock price is oversold, that means that it's sold, that liquidation was sold until it couldn't sell anymore.
Mm-hmm.
Now it's at its lowest price. People are going to start buying here. And when it's at its lowest price, that green candlestick that you just mentioned
Mm-hmm.
will start forming. And then that will be the support price, right? That has been created while it
Mm-hmm.
was oversold and trading below the 200 SMA price,
Mm-hmm.
right? And I'm going to show you an example of this. All of these, don't worry, I got examples for all of these.
Yeah, yeah. Okay.
I got them.
Okay.
um, so for me, this is for me, right? And this goes back to your question about how many stocks you should watch.
Mm-hmm.
Look, do not trade more than 3 different stocks. Hard to
Right.
say.
That's why I was wondering, how am I going to manage all these? And you understand what I'm saying? And I don't even know what I'm doing.
Correct.
Yeah.
Right. I'm just, listen, you got other stuff on the brain, right?
Yeah.
You have other stuff that you need to do. You have other things that need to be done. All your mental power should not, only unless you have the time, right?
Yeah.
Typically on Thursdays and Fridays, I have time
Mm-hmm.
to really sit back and digest the week, right?
Right.
Because
Mm-hmm.
Monday, Tuesday, Wednesday, it's like move, right?
Mm-hmm.
And then
Mm-hmm.
Thursday, Friday, it's like, all right, what happened? That's
Okay.
for me.
Time to do a little something before the week ends.
Right. Maybe, I don't party as much as I used to, which I probably should because it's making me dull. But but a lot of my time has been just to educate myself on things that are very important to me. And
Right.
understanding money management through investing in businesses is a strong lesson in investing in myself. So all this time that I've missed parties, like even birthday parties, weddings, birthday showers, like I missed some like pretty valuable stuff in the past like 3 years at least, just
Right.
learning these things, like really
Right.
taking this seriously and not as just a game, right?
You
Because
don't know the pressure that's on me because I want to know it. And it's just like my brain can't absorb it all. It
yes,
just
it
seems like
can. You can do anything you want. I guarantee you can do anything you want. The
Mhm.
thing is that, you know, because it's new, that's
Yeah.
one.
Mm-hmm.
And two, you are probably not around people to encourage you, gets
Mm-hmm.
harder. Anything that we do by ourselves has
Yeah.
an enormous amount of weight on it, right? Because
Right.
once we know what we want, we're
Yeah.
looking up like, okay, what in the world do I have to do now? What is
Right.
it do I have to create in order to be successful here? And the
Yeah.
one thing that successful people do is that they surround themselves with other people with the same mindset.
Like-minded.
Successful, correct. That's right. So if you're all thinking in a line with each other, we all want to be successful, and and you're seeing success out of this, even if the success is to even if the success is it becomes with some minor losses along the way, because these are losses are inevitable, but
I don't mind the losses. I just feel like I feel like my brain isn't absorbing as much as it should be. And I'm kind of hard on myself. It's like, I need to know more. I'm doing this and it just seems like I'm not absorbing anything. It's a bunch of mush right now, you know?
It will be until you can clearly see these rules, right?
Right.
And once you clearly see these rules on the chart, then you're going to be like, all right, I'm seeing these now. And it's not going to happen overnight.
And that's why I honestly make an effort every Sunday night to come in. Even if you don't hear me, I am here. You understand what I'm saying? You don't hear me responding, but I'm on. You understand?
Got you.
Because I want to know it. I just like I'm kicking myself in the shin because I don't know it. And it just seemed like it comes over my head. It comes over my head. I'm listening. You understand what I'm saying? And I'm just getting words here, a little bit there, a little bit here, but not enough.
Well, I'll tell you this. There are some successful traders who took them years to find success.
Yeah.
Like years. I'm talking about more than 5 years.
Wow.
Right? But once they were consistent, and that was the thing. They all the number one thing, well, actually two. The two determining factors that produced success out of all of those traders was consistency and discipline.
Right.
Because once you had the consistency and you were disciplined, everything else lined up on its own. The things that you weren't seeing, you were starting to see. Right? And it only gets better over time, because now you'll be able to predict things a lot quicker in future.
Right.
The things that are blooming in front of you, right? And you're like trying to react now, you're trying to really react, will be lessened, and you'll only be responding. You'll be like, oh, okay, I know where it's going. I'm gonna sell because it did, it did what I thought, and tomorrow it's going to do something else, right?
Right.
So you're starting to see these things. All right. So like I said, 3 different stocks, no more, hard to manage.
Right.
Avoid low volume stocks that trade below average volume of 100,000 on the day, unless there's a steady increase in volume. And this is in anticipation of some market company news as a catalyst, right? So a lot of times, this is rule 13, a lot of times, there will be stocks that are trading like 70,000, 90,000, 50,000, right? But it's just depending on when that trade happened, right? And a lot of times we're not going to be able to see it. So, so I want the stocks that are in play already. I want the ones that are already like, you already know it has volume. You don't have to second guess. The volume is over 500,000, right? I like over 500,000 because the price action continues to go, right? And the price action could do the same on thin volume, but that thin volume can be manipulated so easily that a stock that traded only 100,000 and went up $5 a share today can trade 50,000 tomorrow and go down $4 a share. So because it can be easily manipulated. You have 50,000 people in the room, 40,000 of those people don't like the price, and they're saying that price sucks. And there's only 10,000 of us. It's like, well, this price is good. It should go higher. The 40,000 are going to push that price down. So you want million. You want 500,000. 1 million.
You want above that.
You want 3 million. You want that.
Yeah.
right?
Okay.
You want that. So that's why I say avoid low
Low
volume.
volume stuff.
Um, so once a new high has been created, right?
Mm-hmm.
Sell into the uptrend, right? This is the meat of the move.
Mm-hmm.
Sell into the uptrend and or when overbought on the RSI.
Yeah.
Eventually, the price will retrace to the 20 SMA price, then the 200 SMA price, and then below the 200 SMA price. It's
Right.
not a matter of if, but when. So capture
Yeah.
your gains, right? So always keep this in mind. When a stock is trading above the 200 SMA price, that's
Mm-hmm.
bullish. As the stock is
Mm-hmm.
trading below the 200 SMA price, that's bearish, right? And
Okay.
that is going back to up here, rules 1 through 7, right? Um, rule
So
number,
below is bearish and above is bullish.
correct. And we're going to see this on the chart coming up. A couple other rules just to hammer some stuff in. When re-entering a stock after closing is intraday, analyze it as if it's a brand new stock by implementing rules number 7. So when re-entering a stock after closing it, probably on the intraday,
On the same day.
on the
Uh-huh.
intraday time frame.
Okay. On the intraday.
Time frame. So when I mean intraday,
Uh-huh.
intraday is going back to this time frame of 2 minutes, right? So
Mm-hmm.
the 2 minutes, um, I extend the chart for 5 days. Some
Mm-hmm.
people extend the chart for 30 days, like 2 minute and 30 days, right? I like 2 minute and 5 days because during that 5 days time, I can clearly see the low and the high of those days. And I want the stock to be trading near the low so it can go and retest its previous high in the past 5 days.
How
And
do you extend the chart though?
we're gonna go through that.
Okay.
We're gonna go through that,
All right.
and I should want to make sure I don't lose train of thought because I want to show that with not Peloton but AVXL. I think it's AVXL. It's a biotech company that deals with dementia and Alzheimer's.
Mm-hmm.
I traded it before. I've earned money off of it.
Mm-hmm.
I want to re-enter the trade, and this is where it's at right now. It is at this, at this number 14. It went to overbought, and now it's trading below the 200 SMA, right? So now, even though I sold it on the intraday, I'm not re-entering on that same day, right?
Mm-hmm.
So I'm still going to reanalyze it as if it's a new stock from rules 1 through 7, right?
Okay, you're saying in an intraday or intraday, the day when you enter it into the
No,
stock?
intra, INTRA. So intraday is that 2 minute time frame,
Oh,
right?
it's a 2 minute.
It's the
Okay.
time frame. So intraday means time frame, meaning happening within that day, right?
Mm-hmm. Okay.
So the intraday time frames, really, if you want to get real technical, you can say is the 4 hour. Well, no, not actually. Yeah, you could say it's the 4 hour and the 1 hour because it's happening on that day. But the reason why I say the 2 minute is because the 2 minute, you can clearly identify where the previous high was made and the previous low was made on those 5
On a,
days.
okay.
So when you re-enter on the intraday, you want to be near the low on the intraday time frame, so that, and below the 200 SMA price on the intraday, so that it can go back up, retest the previous high on the intraday. And hopefully when you bring the time frames to the daily also suggests a bullish or uptrend to the upside, right?
Mm-hmm.
And we're going to go over that with is it AVXL or AXVL? I think it's AVXL, right?
Mm-hmm.
So we're going to go over that with that one. And then, so that's intraday. So we have the daily, we have intraday charts. So daily chart, intraday chart. You also have the weekly and the yearly chart, but intraday is usually, over a couple of days using 2 minutes, 5 minutes, 1 minute, right? 30 minutes, an hour, maybe, I guess, 4 hours, I guess, but definitely 2 minutes, 5 minutes, definitely.
Yeah.
That's intraday time.
Intraday. So now, so when you enter and leave it, you keep those charts for yourself, or you just go back into where that stock was when you enter and leave it?
You have to reanalyze it as if it's a brand new stock.
Okay.
Yeah, you go back to the same criteria 1 through 7. You analyze it. You say, is it still worth it? Because remember the volume. Remember, money doesn't stop moving. The volume can still go up or it can go down based on the time of day.
Okay, so now you said you don't go into the market until Thursday. So you don't
no, that's not what I said. I said that I usually have time to relax, to sit back and do something like I'm doing right now with you on Thursday, Friday.
Okay.
Typically, right? Now, and that's during the day, right? So I trade during the day, but usually by time 11 a.m. hits, I'm not even looking at the stock market. Me and the stock market have no relationship. I already know what I want to do. I already know where it's at. By this time, if I'm looking at this stock, it's because I want to make sure it doesn't trade below my risk level.
Okay. But you do look at it every day. You look at your stocks every day.
I look at the stocks every day, correct.
Okay.
Look at it every day, but the amount of time that I look at it varies from the very 3 first days of the week and the last 2 days of the week.
Okay. All right. So usually when it comes on to the last few days of the week, it's either not doing what it's up, you do what you planned for it to do, or it's not doing it.
Like I said, some stocks, sometimes they can be held longer. Sometimes they, based on what they're doing. Remember, I showed you Snap, my rules for Snap, and I was holding it in June. It's now July, right? So I've been holding it since the 29th. So that's a couple of days, right? So so it just depends on the market movement and the plan and your plan.
Okay. All right.
Right? The plan is important.
I'm just thinking that is something that I need to nurse, and I need to look at it every day. But then what happened on, say, towards the end of the week, it's like, is it, do you do any panic sale, or you understand what I'm saying?
No, you just you follow your plan.
Yeah.
You follow your plan. Your plan is your plan.
Okay.
That's
keep the plan. Just keep the plan.
Stick to the plan. Keep it simple.
Yeah. Okay.
You stick to the plan. Like, what's your plan? Like, you don't go, like, I don't know how often you make plans when you do stuff, but when you do something, like, typically you have a plan on when you do it, like, or how to do it. You're like, okay, well, I need to do this, and I need to do that, and I need to do this, and I need to do that. All right, I got that and that, and I got that and that. All right, let's go for it.
Okay.
Market works the same way.
Okay.
This is how we keep it simple.
Yeah, it's just new territory for me, and it just seemed like this is a new book.
Absolutely. And that's how this is how we keep it simple, because we're reminded, even though it's something brand new, you still have to think simply, because once you start, like, for instance, if I'm looking at a stock and I'm getting clouded by all thoughts in there, I said, nope, not time for me to trade. Like, it's not a time at all. And I leave it alone.
Okay. Okay.
And then maybe walk away and then come back, right? And maybe I'll come back later on in the day or whatever. I'll go do something else, right? I go do something totally else. Like I'm not even here.
Mm-hmm.
And then I'll come back and I'm like, okay, look at it with a fresh pair of eyes.
Okay.
So rule number 16. Um, did you identify the historical long-term pattern on the chart? Do you notice any noticeable behaviors? What happens after the initial spike in the past? So this is where the chart often rhymes, right? So what it did in the past, it typically is going to do in the present, right?
Mm-hmm.
And might not look exactly the same, but
Mm-hmm.
it rhymes. It rhymes, right? So it sounds similar. So that's why you always look at the long-term chart and like the daily, and then you break it down to the 4 hour. Then you break it down to the 1 hour. Then you
Mm-hmm.
break it down to the 2 minute. And then from the 2 minute, you look at it and you say, okay, what price do I want to enter? Then you from the 2 minute, you go to the hour. Did that price that you made at the 2 minute, does it complement what you said on the hour chart? Then the 4 hour chart, does it complement what does that price that you want to get in at and get out at? Does it complement
Mm-hmm.
what you say on the 4 hour chart? And
Mm-hmm.
then on the daily chart, the price that you just mentioned, does it complement what you just said on the daily chart, right? So this is where you really confirm if your plan of action, your where you want to buy and sell at really meets anything, right? By looking at the long-term chart, seeing the behaviors, and seeing if your plan correspond with these
So
behaviors.
it's like training an animal. You got to train to see how that animal behaves. You understand? You can't teach, you can't expect the animal to behave the same way every time, but you have to watch to see how that behavior pattern is.
I wouldn't say it's training the animal because we're not training the market. The market is training us.
Yes.
I would say it's riding the mechanical bull and try to hold
Yeah.
on.
Right.
Doesn't even have to be mechanical, a real live bull, right?
Yeah.
So the bull is in this cage at before 9:30. But when
Uh-huh.
9:30 comes, or the bear, right?
Uh-huh.
The
Uh-huh.
bull or the bear, and then
Uh-huh.
when the market opens, the bull or the bear starts coming out swinging, right? The bear
Uh-huh.
swings down. That's how it fights. It fights with
Yeah.
its paws going down. That's why it's called bearish because the price goes down as the bull,
Uh-huh.
as the bear is fighting down. The
Uh-huh.
bull is fighting up, right? It's fighting with his horns. The price is going up. Our
Uh-huh.
job is to identify when
When it's right.
it's moving in the favor that we want it to move. Because you
Exactly.
might want to bet against a stock and want to go with the downside price action, right? So if you want to
Uh-huh.
go with the downside price action, right, you might say, okay, well, I'm waiting for this price to go down. And then you'll look at your rules on a bearish stock and say, okay, because the stock price is going down, right?
Uh-huh.
I'm going to get in at this price. Okay, well,
Uh-huh.
because this price is going up, I want to get in at this price and then get out at this price, right? So you're thinking of when to get in and out on the bullish side and on the bearish side.
Very side. Okay. All
Always.
right. Yeah, that makes more sense.
Um, oh, okay. So that's the behavior. Number 17. Would you trade this if you were giving a presentation in front of experienced day or short-term traders? Did you go through all the progressions mentioned in steps 1 through 14?
Okay.
Right.
Oh, okay.
So
So once you follow those steps, you should be confident enough to trade it.
no, not even comfortable enough to trade it. You should be comfortable enough to say this in front of people. That's what
Okay.
I'm saying. Like
To thine own self be true. You
correct,
stick with the plan, follow the steps, and it is foolproof.
correct,
It should you should be comfortable enough to say yes and stand by it.
correct,
Okay.
correct. Well, number 18. And there's nothing wrong with being wrong. And if you came up with a plan and the plan end up being wrong, also
That's
identify why was it wrong, right?
okay.
Right. This doesn't always go with trades that are going good. And this is why oftentimes when I do the Sunday talks, I mention the stocks that I didn't do well on.
Right. I noticed
Because
that. Yeah.
because I could tell you, yeah, I earned 500 here, I earned 300 there. Yeah, I could tell you all of that, right? But
Hmm.
at the same time, what did you learn? You learned
Hmm.
that I earned, yes, but you
What
know,
did you lose?
what
Right.
what what did I lose to? Right. And if I
Right.
did lose, what did I
Why
learn from
did
that
you
learning
lose it?
lesson? There's always
No,
a
I did a class this week on, um a BLS class, right?
yeah.
And I was doing my test, but I'm a person who's second. I want 100% on the test, even though 80 is passing or 85 is passing. I want to know if I miss one, why did I miss it? Why was I second guessing myself? You understand what I'm saying?
Hmm.
And I'm really hard on myself, for that. I don't want to move on until I can analyze what I've done wrong so that I don't make the same mistake.
Well, there's one thing with I appreciate someone who is really diligent and
Mhm,
not and hard on themselves because I am hard on myself. But
mhm.
let's also be mindful to have compassion for ourselves because oftentimes I don't have compassion for myself. And I'm learning now that even though, something might be wrong, yeah, and I want that 100%, it's okay. Sometimes it's okay to get the 80, the 90%, right? As long as you are in that 80 percentile with the rest,
But
right?
I don't want to sacrifice that other 20% without knowing why I sacrificed it. You
Well, it,
understand? I'm not that hard on myself that I would go lay in front of a moving truck, but I still want to know what I did wrong. I did pass, yes, but I want to know that 20%, where was I wrong, so that the next time I do another one of these, that will not be one of those I'm getting wrong again.
well, no, that's how you come up with these rules.
Right.
This
Okay.
is how
Now,
you come up
now.
with rules because you have to go back and look at your
Mhm.
trade. Like
Right.
you have to. Like it's impossible for you not to, right? If you want to be successful.
And I do. And that's probably my problem, because I
No,
want to know it and I want to understand it, so that I don't want somebody to do it for me. I want to do it. You understand? But I still want to capture everything. You understand? And absorb it all to the point where I can say, well, I made that mistake and I know I did it honestly. You know?
well, have that as your goal, but also be compassionate with yourself in achieving that goal. That's what I'm saying. There's nothing
Right.
wrong with wanting to know it all.
Yeah.
Nothing wrong. Like that's my game. I'm a Virgo. We want to know it all. But at the
Yeah.
end of the day, there's just some things you just have to know that you're not going to know.
No,
But
right.
if you have a plan, at least you stuck with your plan and your plan saved you,
Yeah.
right? Or helped you. All right. And you
Right.
you want to make sure that you're being saved from maximum downside risk and you're
Hmm.
being helped for upside potential, upside reward, right?
Right.
So that
Hmm.
that's why it's so important to have a plan. But yes, it's going to take time to
Right.
take in all of this information at once. Because mind you, I've only been taking this seriously for 3 years. I
Hmm.
just started becoming profitable, and then even this year, I like lost, and then had to build it back again, right?
Hmm.
Because
Hmm.
I wasn't sticking to my plan, and I
Okay.
had to see that once again. Hey, if you stick to your plan, remember you will be successful. And it's like,
If you
oh
had
yeah,
stuck to the plan, you know where you made your mistake, though, is because you came off the road.
because I came off the road, so
Hmm.
I had to get back on the road, and I'm back on the road again.
Yeah.
But it's that building up again and
Oh,
knowing what I did before to get that get that road built. I know it took time, patience, and sticking to the plan. No matter what, you're going to see a stock that you were in and it only went $1 on the day. But you look over, you might turn on some financial news and you'll see a stock that went $10, $20 on the day. And you're like, why wasn't I in that stock? And I'm going to guarantee you every time you do that, and now you're going to start forcing yourself to find these stocks that trade $20, $30 on the day, and then you're going to be forcing trades. And then once you're forcing a trade, you're getting away from your plan.
Oh,
And
okay.
then once you're forcing trades, that means you're getting away from your plan because you're forcing a trade, and then you're coming off. And I will
Okay.
show you one that I was like, I might be forcing this trade. And then I cut the loss today because, like you said, how did you know it was going to be a disastrous trade? It would have been a disastrous trade.
Yeah, yeah.
And it did exactly that. So we're gonna go to that.
Do you think that having these meetings put pressure on you to stick with the plan or to be great?
I feel like it helps me do both. I feel like pressure only builds diamonds, right?
Right.
So the pressure, I don't mind because I have purest intentions with this, right? It's like, for me, I teach a lot of yoga. So I put a lot of pressure on myself to ensure that I'm sharing the practice properly because I come at it with the purest intentions.
Okay.
So
All right.
when I am looking at the stock market, I'm not looking at it for quick, fast money. I'm looking at the long-term benefit of
The
this.
discipline. You're looking for
This
discipline.
it's a discipline. Yoga
Right.
is discipline, right?
Mm-hmm.
So
Mm-hmm.
like it's even martial arts. I practice martial arts. It's a discipline. So like
Right.
when you become disciplined in something that's so foreign to you, and you
Mm-hmm.
try to understand not just the terminology but your own behavior within it, then
Mm-hmm.
it becomes a whole lot different. It becomes
Right.
something that's a lot more manageable, something that you
Mm-hmm.
can digest a whole lot more because you're like, man, this is a lot more real to me now
Mm-hmm.
because I'm doing it. So now I have to look at it for its long-term discipline. Today, I might not be able to do a side split or a forward split, but
Mm-hmm.
every day, if I practice, I will be able to do a forward or side split.
Yeah.
Okay,
And every day you come closer and closer to perfect it.
correct.
And that's where I am. I probably am. I'm tunnel vision. My vision is beyond the training. It's like I want to get there. I want to get there, and it's frustrating me. You know what I'm saying?
No, I totally get it, and it will be frustrating if you are unable to appreciate the smaller lessons
Yeah.
because I guarantee loss after loss after loss I've encountered before, and that was hard, right? And
Mm-hmm.
it was because one, I wasn't taking that step back and recognizing, wow, you took like 7 losses in a row. What are you
Mm-hmm.
doing wrong? Right?
Mm-hmm.
And one, I wasn't doing that. And then two, I wasn't seeking knowledge,
Mm-hmm.
right? The knowledge. So once I started doing those two, that only further stabilized my consistency and discipline to,
Right.
hey, now if I see a loss, I'm going to cut
Mm-hmm.
my loss and not
Mm-hmm.
allow the loss to run because
Mm-hmm.
sometimes we allow the loss to run and,
Mm-hmm.
right. So I'm just talking.
That's all right. I'm listening. I'm listening. It's all right. It's just me and you. I'm listening. And I appreciate it. I'm asking these questions because I'm a novice and I recognize that I'm a novice and I really want to know it.
Right.
Mm-hmm.
And I agree. And I think this will definitely help. And
Right.
I'm sure there are more rules than these. I'm
Mm-hmm.
sure of it. But right now,
These are
this is
basic rules.
these are basic rules that will help, right?
Mm-hmm.
And then after a while, you probably won't even need the moving averages, right? You probably only use like 1 or 2 indicators, right? But the
Yeah.
biggest thing is digesting what you can right now and taking it day by day.
Okay. Should I always look at the Wyckoff charts?
To get familiar on identifying how the Wyckoff method looks, yes, look at the Wyckoff method at least once a day. And that will
Yeah.
go into one of the rules actually here, number 19.
Yeah.
But we'll let's do 18 first. If the stock price closes above the 5 EMA, then chances are it will continue to trade higher, unless the RSI shows that it's overbought, right? Which the stock could start trading lower to lower overbought indicator. Yeah, yeah. So the stock price, which the stock price, put that in there, price, the stock price, not really should, but could start trading lower so that the overbought indicator is lower, right? So we're going to see that on some stocks that are overbought. Because there's plenty. There are plenty stocks overbought, right? But you know, even though the stock might be overbought, doesn't mean that after it retraces, it won't go up higher, right? So that's just where that Wyckoff method comes into play that you mentioned. And this continues the Wyckoff method, right? Study number 19, study at least 1 hour the night before by reading stock market psychology, technical chart patterns, which includes the Wyckoff, right? And relevant financial news specific to your investment. So sometimes people will say, yo, just study the market. And you're like, what the
Study
fuck
what?
does that mean?
Yeah, that's my, terminology. You're telling me, I was going to ask you another question. You said the stock price closes. Closes mean when? The end of the day?
Yes.
What?
On that time frame.
On that time frame. Okay. So at the end of that time frame, this is where it should be. If it closes above closes above the 5 EMA, that is where it was at the end of that time frame. The time frame could be the 4 hour, the 2 minute, or the whatever. Is that what you're talking about?
Yes.
Okay.
If it closes above the 5 EMA on that time frame.
Okay.
On that time frame. So the daily, the 4 hour, the 1 hour, 2 minutes.
Okay. So it's on that time frame. I was wondering, that means where it is on that time frame.
Yes.
Okay.
The time frame. Where the 5 EMA is. That means it's going to trade higher unless it's overbought. And if it's overbought on that time frame, that means that eventually it will have to come back down lower. Right? And then that lower, once again, goes to that, all right, now that it's coming down lower and it's trading below the 5 EMA, we're going to start trading towards the 20 SMA price. Does it stay at the 20 SMA price? If it starts holding the 20 SMA price, then it'll retest the 5 EMA price.
When I look at the chart seems to be moving. So how do I know what's the 200 and asking elementary questions again? The 5 EMA, how do I recognize the 5 EMA line and the 200 SMA?
You have to create that. You have to put that in the actual platform that you're using.
Okay.
Yeah. And you make it the color that you're using.
Okay.
Right? So some people have different colors. I have colors that make sense to me because I wanted to keep it simple, right? So we're going to go to that, but so yes, but studying the market right, means the psychology, the technical chart patterns, and relevant financial news, right, specific to your investment. Sometimes you might have some stock market moves that's happening that's not directly affecting your stock, but it might be in that market or it might be in that sector. or it might be in that index, right? Or it might be in an ETF, like a Kathy Wood ETF, right? So, we always have to like just be mindful.
Mm. Okay, you just said a whole lot of stuff that I'm not even familiar with. But
We mentioned this at the beginning.
you were at the beginning, yeah.
We mentioned
So
this at the
I'm
beginning when we talked about the Dow, the Nasdaq,
yeah.
the sector, the
Okay, so
index.
how it affect that the Dow, the Nasdaq,
Yeah,
the
that relevant financial news,
financial news. Okay, all right. Yeah,
right?
that's what I was
Check
wondering. What
that
is the
1 hour,
ETF? Mhm.
at least 1 hour.
Yeah,
And then rule number 20, sometimes the best trade is not to
let's
make
make
one.
one at
We
all.
made this at the very beginning.
Okay,
All right?
that makes sense.
So we just went through 20
Rules.
rules, 20
Mm-hmm.
rules, right? With
Mm-hmm.
some deeper explanation in between. Took us
Mm-hmm.
about an hour to do so, right? So
Mm-hmm.
we're going to use these rules, and then we're going to use these rules in full application.